Well, thank you so much. But before we start, I do understand German, so after the Q&A, please fire your questions also in German. It's no problem. But I do like to do the presentation in English if you don't mind. So my name is Ben Bos, member of the board of CLIQ Digital AG. And let's start and kick off just some highlights on CLIQ. We are a streaming service provider of digital goods, movies, audiobooks, games, music, as well as live sport events. Just to give you an overview, we have currently 1.5 million subscribers on hand, up by 200,000 since the beginning of this year. We performing about 150 million euros of revenue last year, guidance out there for this year 210, and we expect to reach 500 million to half a billion in revenue by 2025. We are, and that will probably surprise you, we are a dividend payer. We pay 40% of our results back to our stakeholders, to our shareholders, which I think is quite extraordinary in the market. As you can see, the profit has been going up quite rapidly over the last 4 years, but actually, if you compare this over the last 10 years, we already have a CAGR on the net results of over 50%. So we are generating cash. How do we do this? This is in a market which is quite big and will grow to a 450 billion of gross revenue in dollars in the specific segments where we are operating our business. As you can see also here, especially on some of the segments where what we are selling, like the cloud gaming, is going to increase by 50% on a yearly basis, the market. We sell our products, but first let's go to the product itself and in a nutshell, before I jump into how we sell our product. We have on hand movie series, music, sports, audiobooks, and games. We license all those products, so we do not produce any content. Also, if I compare this to our competitors in the market, there we do it completely different, and we are depending on those licensors giving us the licenses for those products. However, the market is big and there is a lot of content out there. So we do not concentrate ourselves in producing expensive content and just wait and see if it sells. No, we are looking for content which is already made its successes itself, and where we can tap into the content which is existing already, and we just pay a license fee based upon the revenue or the performance of our company. So in that respect, we know on forehand what kind of margin which we can realize. If we look to specific segments, and I won't go through them all, but we have quite a big library meanwhile on movies and series, whereby we license, for instance, from ZDF, but also from Leonine, probably well known as Palantir, these kind of companies. But we also have Hollywood blockbusters on hand. So there where we can, we have products from Disney, which we have in our product portfolio. Music, we have a library on hand, based upon publishing rights, not on label rights. Sports, we put us together ourselves, whereby we have not the expensive rights like Bundesliga or Premier League, but we are putting together a nice piece of content which we present the highlights of certain sport events. However, we went out this year for the first time with Series B of Italy. It's more a test for us, whereby we license this product and broadcast during the weekend all the matches which are being played. Audiobooks, we have about 200,000 audiobooks on file in the several languages, which is quite impressive, I think, and which can be used for the same flat fee as you're paying for this subscription, because our services is going out with a flat fee on a monthly basis, where you can subscribe to those services, and those services, if you like, you can cancel anytime. So you're not being bound to a subscription for 6 months or so. You're very flexible. Games, we have about 1,200 core and casual games on hand, and we recently also signed a deal with a Paris-based company called Blacknet, whereby we are going to present, and I already elaborated a little bit on that before. The cloud gaming market is growing rapidly. We contracted this company to provide us the cloud games. So those games which are now being played on the Xbox and on the PlayStation, they will go live in the cloud as well. So you don't need the console anymore going forward. So this is all included in the Multicontent store, as you can see here. This is a one-stop shop, and people can subscribe to the services all together for one single fee. This is the history of the company. Where did we come from back then? And I need to watch my time. But in a nutshell, we started the company back in 2004, 2005 by selling, believe it or not, the joke of the day in a subscription form, whereby the company sold 30 million jokes being pushed via SMS in the US alone for $1 each. So starting with these type of content, knowing that on the long term, by getting more bandwidth and better handhelds, so the technology would further improve, that we could sell other products as well going forward. So the evolution of CLIQ has been the evolution of the technology as well over the last 15 years, whereby nowadays we are selling all those products which you just have seen in the previous page. How do we market? Because also the joke of the day has been marketed by TV campaigns, and just waiting to how people will respond and react to those advertisements. Slowly moving from TV advertised product into internet advertising, where we are nowadays, and selling it via direct marketing, so direct response. So we expect people to respond once they see our advertisement. We follow this very closely, and we built the system, a technology whereby we can already on forehand estimate what this consumer base will bring us. I'll come back to that in a minute. We back then charged the consumer only by premium SMS, so direct carrier billing. Nowadays, 70 to 80% of our clientele, our consumers, are paying us via credit card. It won't surprise you, also back then was being distributed only on mobile. Nowadays, any internet-enabled device is distribution platform for us. Where we're heading to, further roll out our services globally. We are currently in the US for 50% of, over 50% of our business, and the other 50% mainly in Europe, a bit in the Middle East. And we are planning, or we are currently testing the market also in Latin America. Of course, an improved portfolio with adding new categories like podcast, like kids content, and we will continue doing so to offer a bigger portfolio. Also, localized content is, especially for our marketing efforts, very important. If we look to some strategic milestones, as said, we started the company with selling just ringtones and the joke of the day. However, in 2019, we really made a change in putting together this multi-content offering, and not only selling one single product, one single content category, but putting them all together in one portal. It's a one-stop shop, which is convenient for the consumer. Another thing which we changed back then in 2019 was the way we do our marketing. As I said, we do quite a lot of marketing online, and we were using partners. But nowadays, we built a team, and we start doing so by 2019, building our own media buying team, which brought us in direct contact with players like Google and Facebook, which help us with their algorithms to find the right target audience. So how do we do our marketing? How do we attract new consumers? Direct marketing, impulse marketing, so no brand marketing so far, which means that we offer a product, a specific topic. It can be one of the 5 content categories which we offer online. So this is what you see here on screen is just an example on sports activities. So people are interested and search something about soccer or football on the internet, and they ran into one of our advertisements. If they are interested, they click on it. And once you click on it, you will see the second, well, it's pretty small, I think, but the second phone, which you see here, the picture, is that people see that once they are interested, that they are not only get offered the content of soccer, in this case, or sports, but also the other 4 content categories for one price. Once they're interested, and approximately 5% of the people who are clicking, so it's the conversion rate, 5% of people who are clicking on this ad are subscribing to our services. Of course, they get offered the payment method, and once they have paid us, they subscribe, I would say, because they get an initial, how do you say, a week or a month of free trial in this case. But once they leave the credentials, they get access to our content store and can enjoy the content. This is what we call impulse marketing, direct marketing. And we can monitor this because our system will deliver the moment that you subscribe to our services, the amount of revenue which we can derive from each individual customer. So this is, I think, a quite impressive system which we have been building over the last 15 years. So depending on the target audience, where we advertise, when we advertise, on which channel we advertise, we see differences in ARPUs, in average revenue per user, which you can derive from each individual consumer. While getting this information directly once people subscribe, you can imagine that we can already pre-calculate what kind of margin we can realize. And by having this methodology in place, we can decide whether we continue with a marketing campaign, yes or no. So if we see that it is loss-making or not bringing us enough margin, we at that time can stop the marketing campaign and not spending money and waste and have a waste of marketing money which doesn't bring you this number of subscribers. And this is a system in place which is quite I think a unique system because our competitors are not using it. They're only doing brand marketing and just wait and see till people subscribe to these services. So we can exactly predict what kind of revenue we can derive from the consumer group who is responding to and subscribing to our services on a specific advertisement. Multi-content portals, single content portals, we do both, but the majority of our business is in multi-content, the one-stop shop. So how do we position ourselves? Well, with the multi-content portals, because this is also quite a unique concept besides Amazon. They also sell the different content categories which we have online, but we all know that Amazon is driving making use of this system for the physical distribution and not necessarily for the content store. We are targeting value-oriented consumers, so the mass market. So those people who like content but not necessarily have a specific interest in one or multiple content categories. Also, those people who cannot afford themselves to subscribe to all services at the same time from our colleagues, because then you end up by paying 50, 60, 70 euros on a monthly basis. And especially nowadays, whereby people have to watch their monthly budget, I think we are well positioned to offer those services to our customers. Content, as said, it's all licensed and it's indexed to the revenue. We pay either by pay-per-use, like the audiobook. We start paying our licenser only after 10 minutes of listening by a consumer. Then we start paying our licensor, because there are a lot of people who are just skipping and listening to a book for a couple of minutes and then they go away, and that would be a waste of money for paying for a whole book while people are only listening for 1 or 2 minutes. In other cases, we pay just a percentage on our revenue, or we pay a small amount per subscriber. If you look to the marketing, well, we are approaching members via performance marketing, as we call it, direct marketing. And we use, therefore, our analysis business intelligence tool, which we have been building over the last year. Brand marketing, we will start brand market, also the name CLIQ, during the summer for the first time again. It's not new to us. We did it, of course, also in the beginning with the product lines in 2004, 2005. But we think also that it's valuable to bring forward the brand name CLIQ in the coming years. It's the service of one-stop shop. It gives unlimited access and people can unsubscribe anytime they like. The economics, we have a profitable membership already within the first 6 months of the lifetime of a consumer. And every marketing euro we spend is a profitable one, because we can monitor this very closely. Average duration, 7 to 8 months. It's not what you maybe expect or what you see with the Netflix, whereby they invest maybe a couple of €100 to get a customer in, a consumer in, and wait for maybe 2 years before they get break even on a new customer. No, we are used to short-term usage of the content. As you can imagine, with the joke of the day, you won't expect that people stay in there for a couple of years on such a subscription. So we are used to it and we can handle it, and therefore we make sure that we make money in the first 6 months of the lifetime of a subscriber. Members, they're price conscious, it's a convenience, it's a one-stop shop. The gender agnostics, male between 35, 55 years old, female coming in as well, as we are providing also games, more and more games. Families, up again, to underline the affordability, up to 5 people in one household can make use of the same subscription. And the content, fans of local program, movies and series in their own language. Also, the own language is very important for our marketing to attract customers. This is more for you to review. It's in there, it's in the book, but because of the time, let's continue. The market development. The market is growing and it's still growing. We've seen, of course, also from Netflix lately that subscribers went down by 200,000. If you noticed in the publications. However, I don't know if they made that mistake on purpose, but 700,000 to 800,000 subscribers were unsubscribed because they were in Russia. So, as a matter of fact, the member base has been growing. We don't know why they did not mention that in their press release, but in general, and that's my point which I want to make, people are getting more and more online, getting entertained. They want to get entertained the moment they like to be entertained and wherever they are. So in the past, 20 years ago, we were all, of course, watching the news at 8 o'clock, sitting on the couch, and it was being presented to you. Nowadays, you can enjoy the news, as long as you can enjoy it. It depends on the news, of course, but you can watch the news everywhere, anytime where you are. And that's a big difference. So this will be growing, and also technology will bring us much more new products going forward. If you think about virtual reality, what is coming up, it's amazing. In the coming 10 years, this space will continue to develop itself. So we can tap in there by doing more marketing, bringing out more products, going out with localized content, but also improve our portfolio on content, but also going out into other content on the other continents, I would say. Like we just started again in Latin America. Let's go quickly through the financials. Marketing spend. So marketing spend is one of our KPIs, and you see that we have been growing this quite rapidly over the last quarters. But also over the last 12 to even 16 quarters, we see gradually our marketing spend growing, as more marketing means more members, means more revenue. As said, with our marketing knowledge, and that we know that we can make a good and decent profit on those marketing euros which we spend, we of course will continue growing our marketing spend with more content and more offerings into the market. So we could increase that further to 22.5 million. We have a guidance out there of 70 million. I come back to that in a minute on marketing. So we'll keep on growing. Last year we did 54 million on marketing alone. And this is, again, I will repeat myself, more marketing means more members, means more revenue. At the same time, you see our numbers of member base growing from 1 million by the end of the first quarter in 2021, a year ago, to 1.5 million, so up by 50% to 1.5. We expect this year 1.7 to 1.8 million at least on members by the end of the year. 104 million remaining lifetime value. We called it in the past our pension fund. It's an off-balance sheet item. And this is what secures our revenue going forward, because this is what we have in base with the same methodology, with the same system, the business intelligence tool which we have on hand, we can calculate the remaining value of the lifetime of those members which are with us. And of course, it speaks for itself that a customer which just joined us has a higher value than somebody who joined us a year ago. So this is came in at 104 million. It's an important KPI to us because it also means that when we do not do any marketing anymore, we will realize at least 104 million euros of marketing, of revenue. Last bullet, as you can see, we also now, because we're becoming more and more transparent, which was requested, and we are growing up and we are becoming more and more transparent. So we nowadays also release our lifetime value, which we can derive from each customer, which slightly goes up to 71 euros. Also due to the fact that we are offering multi-content stores. So a couple of years ago, it has been only half by 35 euros. And now you see it growing again because of the fact that we have this multi-content store out there. Overview for your convenience of the last year. Here you can see the dark blue columns is representing the marketing expenditure. Light blue is the revenue which is going up. And the yellow one is the EBITDA level. First quarter released yesterday. We do nearly 53 million euros of revenue, up by 75%, EBITDA up by 56%, EBIT also going up rapidly, and profit for the period even more by 68%. 90 cents on EPS. So yes, bottom line, we are earning money. We did €2.74 for the full year 2021. Just to give you an idea on the magnitude. By region, here you can see more than half we do in the States, bigger part also in Europe, and then the rest of the world is the Middle East here. On the left side, you see the services in multi-content split by a single content and an ad service, which we run in the US, which is a very small part of our services. Marketing spend and marketing cost, just to clarify, KPI marketing spend is what we spend on cash basis in the market to acquire new customers, and which will bring us also the future revenue. The cost allocated during the period has been 17 million only. So we do capitalize some of our marketing spend, and it will be amortized, not in a linear way, because that wouldn't be fair. No, it's going in a straight line or in the same line and sequence of the revenue which we can derive from each individual customer. It is under IFRS 15 to give us a secure reporting system in place, also in the case of margin, and we see fluctuating the margins by a couple of percentages in each period. But if we would have been bringing our marketing spend directly to the P&L, you have huge fluctuations, both in a positive way as in a negative way, on the EBITDA level. So therefore, we have this system in place. But again, don't worry that we are blowing up our cost for marketing on the balance sheet, because it's depreciated not in a linear way, but in line with the expectations of the revenue of a consumer. We are cash flow positive. We pay out dividends, otherwise we couldn't do so. But this is also, if we compare this with our colleagues in the market, we do not have any debt on board. So we are able to pay those dividends by having enough cash on hand. Balance sheet, for those who want to have a clear look at it, and if you have any questions, please feel free to reach out to us. But I think, because of the time, let's skip this one. I think this is a more important one for this year. We have 210 million out there for guidance. We did already 52 million, so if we have a flat line for the remaining part of the year, it is easily to achieve, and we are confident that we are going to achieve at least the 210 million euros of gross revenue. EBITDA, the same, up to 33 million guidance out there. We did already 8.3 million in the first quarter. And as you can see, also the expected, the remaining lifetime value, this famous customer base value at 104 million coming in, and an expectation that we do at least 110 million by the end of the year. CLIQ factor profitability index, it's around 1.48. This is an index and a KPI where we measure our marketing efforts for the first 6 months. It's only the first 6 months and not only on the period thereafter. So also the lifetime value, which we are reporting nowadays of the 71 euros, is also very good measurement what happens after those 6 months, because this is again only for the beginning of the period of the lifetime value. For the first time, we also released this year our guidance for the 2025. We think that we are able to scale up to 500 million at least by 2025. So further growth expected on a yearly basis. Also in the members, of course, more members means more marketing, more members means more revenue. So we do expect 4 to 5 million members by 2025. This is, I think, all in there. So probably because of the time, I think there's 5 minutes left. Am I right?
Yes, there are at least 5 minutes less. We also have a coffee break thereafter. So if anyone has further pressing issues, we can maybe also take some time from the coffee break. So let's see, we could have questions in German or English language, as you said.
No problem.
Maybe even Dutch. Let's see.
Dutch.
So there's the first question.
So I have one question regarding Dutch. So I see the goodwill. So 48.2. What kind of positions did you pass, and is the goodwill sustainable?
This goodwill exists already since, go back in time, over 10 years, since 2012. So originally, or Bob Mobile, it was that was how the company was called back then. Founded, of course, in Germany and went to the market in 2005. But we came in place as Dutchies, as Dutch companies. We were bought back in 2012 by Bob Mobile. And so Bob Mobile bought a Dutch entity called CLIQ BV. And then the goodwill came into place, into effect. And that is still there since then, so over 10 years. We renamed the company from Bob Mobile into CLIQ Digital AG. And of course, we do an impairment test every year. Our auditors are looking at it. But besides that, the auditors are looking at it. We also have, it's not called Duff & Phelps anymore, but it's renamed to another name. But it's Kroll, I believe, the name. But Duff & Phelps is doing a check on our impairment test every year.
Are there any further questions? I would have one in between. You are paying these extraordinary dividends to your shareholders, which is great, of course. On the other hand, why don't you invest it into further growth of your company?
If we see that we can even more accelerate than we're currently doing, then we might consider. But to give you an idea, I mean, we do have cash sitting on our balance sheet. We have, besides that, a credit facility with Commerzbank and Postbank, which we are currently renegotiating for the coming 3 to 5 years. So there's enough money to tap into if we further need to grow the company by having more marketing spent out there. But so far, we have been paying for 3 years already a nice dividend. So we'll do our utmost best to continue doing so.
Very good. So you will probably not approach the market for a capital raise since you have cash on your balance sheet. Any further questions from the audience?
Sorry, can you tell me how many clicks do you have, for example, in Germany for clients a year? Or how many members you have?
Yeah, we don't release any numbers on a country level basis. So far, because it's actually for the first time this year that we are releasing numbers of members anyway. We started by this 1.3 million, went up by 170K to 1.5 million. Specifically in the regions or countries we don't release. However, you can imagine that in the market itself, whereby we do over 50% in the US, that more than 50% of those members are being based in the US. Yeah. Okay, you're welcome.
Any further
question regarding your CAC customer acquisition cost? Could you give the development over the past, how they what the development was?
The customer acquisition cost?
Yes.
Yeah.
So in the example, I see 50 euros.
Yeah, the customer acquisition cost, of course, we look at it. But for us, the profitability index is much more important because you probably can imagine if you go out in Mexico, you acquire customers maybe for a couple of dollars each, but the revenue you can derive from those customers is also much lower. So for us, the profitability index is important. So I don't even look at specifically whether it's 20 euros or 35 euros or 10 euros. No, I always look at the profitability index. If the marketeers can match that and the minimum requirements, they will keep on investing, and we keep on investing in marketing. So if it all of a sudden will be 100 euros, we pay 100 euros as long as we can make sure that we can make this margin.
So it's on countries.
Yeah.
For example.
You've been around for a while now with your company. What was and for quite a while it did not work so well. So what was the trigger to switch business really, growing now so fast?
Yeah, the real trigger was two elements. In 2019, and maybe I was too quick over the sheet. Here we are. So we changed two major things, which was the way we did our marketing. In the past, we have been using affiliate partners. And those affiliate partners were placing our ads everywhere on the internet. So they were just shooting from the hip on each customer without precisely targeting where we could get our customers. So we decided back then to start building our own team, our media buying team, starting off in the US. Because it's one market, you only have to have one contact within Google, Facebook, etc. So we could more precisely start targeting our audience because they could help us. So okay, there on the web, if you place your ads there, you can have the highest conversions. That was one of the first steps we took to change it. The other one was bringing together the content and getting more content in specific areas and bringing that together in one-stop shop, in a multi-content store. So in the past, we were offering each individual content category on an individual basis. And it looks like that I think the proof is there, that people like to have the concept that all the content is in one place and for one price. It's an affordable, it's a mass market. Not that we think that we have the best content out there, we have good and decent content, and we always say we sell cola, but we don't sell Coca-Cola. We sell energy drink, we don't sell Red Bull. And that's also a big difference how we approach very clearly to the market. Those are the differences which we did. Thank you. As the end. Those changes and also allow me, because before that time, before 2019, since 2014, and even also before, we were already making a decent profit, but not at the magnitude and the growth rate what we are doing now. But if you look back over the last 8 years, we already do on net results a CAGR of 50%, 51%, 3%. But yes, it's really ramping up since 2019.
It's probably the biggest shareholders.
It's management, 11%. We do not have recognized specific bigger shareholders as we are on scale. Although we perform, I think, like being on the prime standards, we are reporting very quickly. We had our AGM already on April 14th. We released our full set of figures yesterday for the first quarter with a full set of accounts. So not only press release in revenue and EBITDA, no, you can really drill it down to EPS. It's available on the website, but for sure you are on our mailing list, so we can you can have a look into the details. Yeah, it's hard to say where they are, but we have a lot of retail investors, and we recognize, at least Standard & Poor's did a research on our investor base. They estimate that we have about 30% of institutional investors. in our base.
Okay, Ben, thanks again. I don't see any further questions in here, and I can recommend to you our presentation, Know Your Shareholder, in order to get further details, which I will present later on in this
Okay.
in this room or maybe one room further off.
Okay.
Thanks, and enjoy your coffee break.
Thank you so much. Thanks for having me. Thank you.